Well, thank you for that question. I would say I'm healthily optimistic. I mean, right across Europe, we can see that the vaccination effort is going really well now, with vaccination levels rising quickly across the board. And infection and illness rates are actually falling. So, and the other thing we have is the recent agreement on the EU digital COVID certificate, which will help reopen travel and facilitate the free movement within the EU, which is also a very positive signal. Now, I think that Europe has really mobilized at an unprecedented speed to tackle this crisis at all levels. And we have seen some really important examples of EU-level cooperation in the crisis. For example, the agreement on different types of common debt instruments that are new. And of course, we were delighted that we could support the EU issuance under the SURE program. And we think that the next generation EU funding is a game changer for the economic recovery and actually for EU capital markets going forward. Obviously, what I'd say is we're not out of the woods yet. We need to be aware of the risk of further virus mutations. There could be a gamma variant. We have the potential for somewhat uneven recovery between sectors and regions. And we need to be mindful that insolvencies could actually rise as the government support is withdrawn. But overall, given everything we've been through over the last 18 months in Europe, with a sensible policy approach, I'd say that Europe is in as good a place as any to bounce back strongly. And that's why I'm healthily optimistic. Say is that clearly Europe needs strong banks and a strong financial sector to support the recovery and the economy longer term. Right now, capital and liquidity ratios are indeed very strong right across the banking industry, and so that's a positive fact. But we also need a diversified industry. So what we've seen in this crisis is that retail and wholesale had different roles to play. And that really underscores the importance of a universal banking model and how it is effective in helping the economies out of crisis. We need a financial sector that also embraces digital and sustainability agendas and helps shape and deliver them. And in terms of the path we're on, I think we've demonstrated that during this crisis, banks have been part of the solution, not part of the problem. I think important to recognize the role of capital markets in Europe's financial system. And so making progress on CMU is something that will be important in the period to come. And of course, when it comes to digitalization, I believe that capital markets need to be increasingly digital. And so for us, the electronification of trading continues to be a very important agenda item that is in parallel to the retail initiatives to digitize finance and should not be overlooked. So I run Barclays in continental Europe and Ireland, but obviously that brings me into contact with people in the UK, the US, Asia, and many other places around the world. And what I see in those discussions is a remarkable similarity of priorities: the COVID recovery, the climate challenge and sustainable finance, and the digital transformation. So those three things really are shaping the current agenda. Europe's role, of course, is to push the global conversation on these topics as a true actor and opinion maker, and so that they're addressed in a way that is effective for Europe, but also coherent from an international perspective. So on sustainability, for example, the EU has been very far-sighted and early, and for several years now played a really leading role in driving forward the sustainability agenda, much to its credit. And I know that it's aware it can't meet the global challenge alone. That needs international coordination. In terms of the other key jurisdictions, they're also stepping up to the plate and developing their frameworks alongside the EU. It won't always be exactly the same in the detail of the legal frameworks, but my hope is that the outcomes will be aligned and that alignment will be the most important thing.